Hello everyone, welcome to today's US Open live webinar. It is today, Thursday, July 20th, 10 minutes before Wall Street opens as usual. I'm your host, Nikos Zavouras, Senior Market Specialist at FXCM. Tesla and Netflix dominate the news today as markets reacted negatively to the mostly strong quarterly results they reported overnight. While yesterday we got another batch of inflation data, Eurozone was basically, the ones from Eurozone were basically a non-event, but those from UK were more important and they showed a significant deceleration and move markets. That's what we will be talking about today. As always, though, before we begin, please read carefully through the risk warnings and the disclaimers. Okay, let's go ahead. We're going to start with Euro USD, then talk about GBP USD and the UK inflation report, and then move over to the NAS 100 and talk about its technical outlook, but also a little bit about Tesla and Netflix. You can also find a full blown analysis around Netflix on your respective FXCM market analysis websites. But as I said, let's start with Euro USD. The truth is that not much has changed since our last session 2 days ago. It consolidates its recent gains as a central bank bonanza looms next week, comes closer. Yesterday's CPI figures from Eurozone did not offer anything to change that. Eurozone inflation was at 5.5%, moderated again, but core, actually the stickier core, actually ticked up to 5.5% year over year from 5.3% previous. In any case, inflation is still high, and as I said, core rose, so the ECB needs to hike rates again, and it has already signaled towards such an outcome. Again, the decision, both central banks announced their latest decisions next week. US inflation, meanwhile, decelerated sharply, and markets expect one and done by the Fed, but they may be overly optimistic given tight labor market and strong economy. And the truth is that this dollar weakness seems a little bit stretched. Euro USD has eased over the last couple of days, and there is a scope for a test of 1.1096, although a strong catalyst would be required for further correction and a breach of the 200-period EMA just below 1.10. And in any case, as we've been saying, as I said before, the downside is well protected. Now the bullish bias remains intact despite this slight moderation we see, and bulls have the ability to set higher highs, although 1.1495 seems distant for now, which is the next major level, and it's probably going to be determined by the central bank's outcome. Let's move over to GBP USD. UK headline inflation drop eased, I would say, eased to 7.9% year over year in June. That's the smallest increase in over a year. And core CPI that excludes food, energy, alcohol, and tobacco prices moderated to 6.9% following May's 31-year highs of 7.1%. So just to correct what I said, core CPI was 6.9%, not 6.1, 6.9%, which was lower from the 7.1% in May, which was 31-year high. Now, both prints were lower than expected following the recent upside surprises. And this actually probably takes some pressure off the Bank of England for another aggressive move. And GBP USD dropped yesterday as a result and drops again today. Now this creates, now it's exposed to the 200 period EMA at around 1.2780, and then we have the ascending trend line from the 2022 lows, which follows a bit lower. Hard though to see convincing break of both those levels. Something strong, some strong catalyst would be required. Now, on the other hand, inflation is still very high, especially the core, and wages are very elevated as well. And that continues to create a headache for the Bank of England and the need to tighten more. Furthermore, the RSI points to oversold conditions, and as long as the 200 period EMA remains intact, biases on the upside, but does not inspire confidence. The British pound does not inspire much confidence at this stage for higher highs above 1.3167. I believe it would need a fresh impetus, some sort of fuel to lead to the next leg. But as things stand now, higher is what looks more likely. And let's switch gear. We're still 2-3 minutes before the US Open, but let's go to the tech-heavy index, the NAS 100. It is pressured today as investors reacted negatively to the results of Netflix and Tesla, sending the stocks, the respective stocks, lower in pre-market. But that seems a bit excessive. I think the results were overall quite good. But yes, of course, there were some reasons for concern. Now let's start with Netflix, and you can find an analysis, a more in-depth analysis around the streaming giant on FXCM's market analysis websites of your respective regions. The password sharing crackdown and the ad-supported tier, the two main initiatives, are actually working and helped subscriptions increase by almost 6 million users, which is very good. Revenues also hit new records because of that, but they missed the first projections and analyst expectations. They were also underwhelmed around the forward guidance in terms of revenues, and they seem to have been expecting faster progress on these fronts. But for me, the results show that Netflix is on the right path, although there are still pitfalls. And now moving onto the EV giant Tesla. It too hit record revenues in excess of 21 billion. Profits though took another hit due to price cuts, which may continue. Mr. Musk kept that open, while operating margin fell below 10%. Research and development costs increased. And another disappointing thing is that Mr. Musk did not provide specifics on the Cybertruck. A few months ago, he had said that deliveries could begin within this quarter. first deliveries, not volume deliveries. So, but now he just said of within the year, so we're gonna have to see when that will start. Now that pressures the tech-heavy index, as we said, and there is risk for a drop to 15,301. It would be reasonable, but strong catalyst for a test of the 200-period DMA. Now, despite this slight pressure we're seeing, bulls are still on track for taking out 16K mark, but that will also depend on earnings and upcoming Fed decision. So it's hard to gauge that yet. The all-time highs are still distant at 16,770. Now, not much ahead. Most important things are now behind us, but we're still getting Japan inflation on Friday. It is off its peak. Ex-fresh food is 3.2% in the last print. The bank sees underlying inflation below target and maintains easing policy. Expectations for normalization mount, so there's a lot at risk, but WEDA seems to pour cold water on those. But we're gonna have to see what happens. The bank has surprised before. And then we have UK retail sales on Friday, and light start to the next week with various PMIs. But next week is definitely big, with major central banks announcing their decisions later on. That's it from me. Thank you for joining me.